So something that surprises a lot of clients when we go over the details is what's called the alternative quarter election. So did you know that you could actually use a quarter from 2020 to qualify for the employee retention tax credit for 2021? I know it seems crazy, right? Everybody says, well, no, 2021, you have to use data from there. But there's actually a special election called the alternative quarter election that oftentimes is very powerful for folks who are claiming the employee retention credit. And so let's take a look at what this is, because there's a lot of confusion around this. I want to clear it up a little bit. So the alternative quarter election, what's called notice 2021-23, and that was the notice that it's a relatively shorter notice. It came after notice 2021-20, which was the big notice that put a lot of the rules and regulations in place as it relates to the ERC. Well, -23 expanded 20 notice, and in particular added rules and modifications for the 2021 time period of the employee retention credit. And so one of the things that was added to notice 2021-23 was this alternative quarter election rule. So let's take a look and see what it says here. And so the alternative quarter election rule is simply this: it permits an employer to elect to use an alternative quarter to calculate gross receipts. For example, the first quarter of 2021 that met the gross receipts test, then you could use that first 2021 and apply that to the second quarter of 2021. And so the way you do this is by comparing the gross receipts for the immediately preceding quarter. For example, the government puts here in this notice 2021-23, for example, the first calendar quarter of 2021, an employer may elect to use the gross receipts from the fourth calendar quarter of 2020 compared to the fourth calendar quarter of 2019 if they meet the gross receipts test. And so you still have to follow the same rules where you compare the fourth quarter, for example, of 20 to the fourth quarter of 19, or the first quarter of 21 to the first quarter of 19. You have to keep those quarters matching, but you're able to use alternative quarters. So in effect, what that means is that for the 2021 time period, if you're relying on a qualified decrease in gross receipts, that oftentimes will automatically create 2 quarters of eligibility. For example, if you have a gross receipts in the second quarter of 2021, then that applies to both the second quarter and the third quarter. So by electing to use one quarter over the other, you're not foregoing the election for a different quarter. You're actually able to use the election for the gross receipts decrease in the quarter which you experienced it, as well as the subsequent quarter using the alternative quarter election rule. And so it's a very powerful tool for a lot of taxpayers who sometimes overlook the fact that they think if they only have one quarter which they qualified on the gross receipts test in 2021, they assume it's just only applicable to that quarter there. But oftentimes it could be applicable to multiple quarters. Now, here's the thing, and this is everything with the IRS. The IRS points out that eligible employers must maintain documentation to support the determination of the declining gross receipts. So logically, you have to make sure you keep good records. And I have a different video about gross receipts, but gross receipts isn't always as straightforward as it seems. There's very specific documentation on what you have to have on file to demonstrate your gross receipts, and ensuring that the documentation matches how you are filing taxes, particularly if you are an accrual filer or a cash basis filer. Some instances where folks get the two confused and provide accrual documentation with their cash basis filer, or they provide cash documentation with their accrual basis filer, and vice versa. So even the things that look like they're pretty straightforward sometimes have a little bit of nuance there, and take a second look at it. So if you have a question about your ERC, want to make sure you have good eligibility, you have good documentation for the eligibility, or just want a second set of eyes to make sure you didn't miss anything, reach out. That's really what we're here for. We've worked with nearly 1,000 clients on this matter, and ERC is a complicated, complex tax credit. We want to be here to help you make sure that you are checking all the boxes and doing everything the way the IRS is expecting you to do it. Thanks. Talk soon.